What we'll do is we'll get some more market opinion for our viewers. Now, we spoke with Andrew Holland, Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. He says it's possible that we see some correction in the markets in the near term. He's tracking some of the global indicators closely, and he thinks things are not looking all that great. Markets are strong for now, but he does expect a turn in the near term. Listen in.
We could stay higher for longer, but it's all markets, including ours, are looking very overbought. I think the Goldilocks scenario, which people are trying to bake in, is probably not going to turn out to be that at all. So I think it's whether it's a bear market rally for us, but certainly globally, I think it is. So you could see a downtick from here because the Fed minutes were not conclusive, shall we say, in terms of what they were trying to say. So I think the Fed will have to do more in terms of rate increases and get the aggregate demand down, because it's certainly a problem, I think, for the US. The trend for the auto sector is demand is there, that's for sure, and with commodity prices having kind of eased a lot, probably will continue to ease. That's going to be the tailwind for the sector. So I think, whilst I'm saying that, it could be one of those which will see some profit taking. Banking and autos and consumer discretionary are sectors which, if there is a fall led by these sectors, is where you should be picking up, because I still think the deflation trade is going to play out by the end of the year, and that leads to these sectors. So I haven't moved away from that. I'm just worried about some of the things which the market's trying to just take in its stride and say everything's going to be okay. The IT stocks are going to be really a hostage to what happens to the tech stocks in the US, and that's been playing out for some time now. The correlation's very high. So if you have a very positive view that the tech stocks in the US are going to start doing well, which I don't, then I think this rally in IT stocks again will probably fade as markets correct and tech stocks correct in the US, because I think that's where the most pain, I think, will be felt in the US economy. IT is probably I just don't think there's enough tailwinds for the sector, given that it's just following what's happening in the tech stocks in the US.